And guys, we're just connecting to our other social media networks there, so bear with us for a second. This is probably a bad night to be doing this now, the probably best night of the year so far, isn't it?
Absolutely gorgeous.
So it's been a mad couple of months, isn't it?
It's been absolutely mental, especially last 2 months. Wild. From valuation point, which is absolutely brilliant, but from sales point and the letting point, really has picked up. Very busy market, and you kind of feel sorry for some buyers as well. It's very, very tough.
Yeah.
It's very, very tough. If you're selling and you've nowhere to buy, or don't have to buy straight away, it's a great market.
It's it's all relative. Like, I suppose we'll touch on that. I suppose, guys, look, we have our figures in for the first 4 months here as well, up to today, so from the 1st of January to the 22nd of April, okay? So, for example, in relation to stock, we've compared the 1st of January to the 22nd of April 2021, and this time last year, the exact same date. And believe it or not, we are up 58% on our stock levels from last year, which I'm very surprised at, because again, I've only got these figures there this afternoon, like, because obviously they're fresh.
And just to say, these are honest figures.
Yeah, 100%.
Everything here is honest. We're not expanding.
It's from our own CRM system, so like that's where it comes from. So it's 50. Now the reason with that as well, Conor, is I suppose, okay, we have to come out of a lockdown there, and we're in a lockdown, sorry, but last year's lockdown was the first major lockdown, and realistically from the end of February, okay, we got stuff on in March, but remember a lot of people actually pulled out and they were scared, didn't know what way the market was going to go, and then April and May didn't have anything.
Yeah, well, the My Home report, the DAF one of them last year, said that the market dropped 89% of new listings in that period because people were scared, no one knew what the market was going to bring.
Yeah.
Confidence is built, maybe people have got used to virtual viewings.
Yeah.
Obviously banks are lending, I'm nearly sure I read from January this year to January last year, they're up maybe 12% in terms of mortgages given out. So
there's no problem with banks,
and there's no problem with buyers.
Yeah.
So the level of stock is turning, and obviously people at home, but 80 to 90% in the first lockdown, where in this January they're saying the stock levels across the country is 30% down. So
it's bad because in fairness, like normally the end of going up to Christmas time, you're going out to value houses and everyone's always, I'll wait till January to sell it, I'll wait till the Christmas decorations come down or whatever. Obviously this January, so November and December are very poor months for listings for us this year. January was absolutely terrible.
Yeah.
You know, because people remember like the numbers were really high and in the cases and everything like that.
And normally in January, for the Inigo team, I'd always have 20 houses lined up, have a good start to the year, and then you're just seeing a delay. But talking about buyer confidence and from the lockdown of fairly stopped in April, May, I read also that about 17,000 or 16,900 transactions went through across Ireland in Q4, which is a record amount. So that shows that once we came out of the first initial lockdown, confidence started to grow and stock started to go on and people started to buy.
I suppose what we're going to go through now is the types of sellers as well. So the type of people that are selling properties with us in the first nearly 4 months, 47% of them have been owner-occupiers, more likely trading up or trading down. 26% of them have been investors selling up, and there's another 27% made up of receiver or probate or fair deal, and there's a few other things thrown in there as well. So that's mad to hear. Nearly 1 in 4 of sales is investors selling up there as well, isn't it?
Yeah, but obviously rent caps, the 4%, tax. The tax is a big thing when you talk to any investor and why they're selling. Probably I'd say maybe 75% of the reason a lot of them are selling is because of tax. The fair deal probate.
And that's coming out of obviously October when they're going to be taxed.
Exactly. So and that's coming into Q1, but the fair deal and probate, obviously listening to William saying every house in the market is fair deal and probate. It's not less than a third there is fair deal and probate, and we do.
And it's not even less than a third, Conor, because that's 27%, but that's receivers and there's a couple of other things mixed in there. So it's probably a 10% or a 15%.
We do a lot of fair deal and probate, a hell of a lot. So that's the truth. Owner-occupied, you can see it.
Yeah.
People's houses are too small, people's houses are too big, people don't have a garden, want a garden, people are in apartments, need a house.
Yeah.
There's a lot of that.
So who's actually buying these properties? So who are the purchasers? So the figures here, so first time buyers are made up by 42%, investors are 28%, and people trading up are 26%. And I have an other here, 4%, so that might be just things filled out incorrect or whatever. So again, I suppose 28% are investors, so maybe that's filling the whole of the 26% of, like, obviously investors selling what?
I was surprised at that. I was surprised at that because I would have thought it was a lot less, especially on the deals I've done this year.
Yeah.
I would have thought it was a lot less. The trading up one at 26% is a funny one because I thought that was more.
Yeah.
I really thought that was more.
Yeah.
But I think the tightening of restrictions has stopped people going to the market.
Yeah, a lot of those people that are trading up have been people that have put us off, haven't they?
That's
you know, if you think about it, like you know,
so with the tightening of restrictions, that hasn't allowed them to go to market.
I'm going with that there as well. And again, how do they finance this? So again, 64% of people got a mortgage, and 36% of the people that bought off us bought 100% of cash. Yeah. So that doesn't really surprise us there now.
No,
I thought it might have been a little bit higher cash. Maybe this time last year there was more cash floating around. I think maybe so.
The mortgages are there's no issue.
Yeah.
You know, we can see from obviously we only know from our own financial service team, but especially talk about maybe slowing down with listings in January. They were out the door with inquiries in January, and that's a knock-on effect now for the rest of the year. And that team's obviously expanded, but from a mortgage point of view, if you're positioned right, if you're doing things right, people are getting mortgages. Yeah,
so which is great. Like, I suppose, look, honestly, what's the sales market like out there?
It's mad, it's wild. I was just saying
it's the worst. Like, I'm in the business since 2000 and 2003, and it's not the worst I've seen in that. Because the Celtic Tiger was worse because you had people that were coming in that were on 35, 40 grand a year buying their 6th to 7th house, you know what I mean? So investment wise, you know, banks are giving out money.
The central bank rules are, if the central bank rules weren't there 3.5 times your earnings, the market, the price would be a lot higher. In terms of comparables and where prices are very, very strong, but they're not outrageous.
Yeah.
For every house now, you probably have 5 or 6 buyers. It's manic in a good way. The lack of viewings, and I just spoke about the start, is very frustrating. And people kind of say, oh, agents don't really give shite, but agents don't really care, but it's tough because you'd be much better off going in a Saturday and showing and doing your viewings.
But our job also as well, you know, we put up a social media post not so long ago, and we were more boasted that we didn't have to advertise it on Daft and My Home, that we were delighted because our social media is actually working. But again, a first time buyer group on Facebook who has 10 or 15,000 followers, and that other fella there, crazy house prices as well, crazy whatever his name is, 30,000, you know, all of a sudden didn't like what we were doing and thought we were boasting about it, where we weren't, you know what I mean? So, but our job is to get the best price.
A house is worth what some people pay for. Our job is to make sure that it's advertised and priced correctly. If you take, for example, I won't name the road, the property that went to the market yesterday in Clondalkin, beautiful road, really, really popular. So properties on good locations and good roads are always going to be popular. Went yesterday at 325,000. There was probably about 40 inquiries overnight. I could have sold the road, and we're at late trees now. We're at very, very late trees. So that's why, you know, we're not even 24 hours. It's all done through videos. It's all spending time and with the videos and the virtual. And I'm saying to everyone I speak to, ask the agent the questions, because you can't go into it when you're looking at the video. And I was speaking to a couple of people last night on that Pacific Home, and they're asking different questions about what way the sun is coming in, and different parts of the house and everything like that. So.
But what people have been doing for years, Conor, is they've been buying houses off the plans of builders. So the new homes market, no one has ever given out about you get a brochure and there's the plans of it, but then there's a big disclaimer, this might change, you know what I mean? And you're going into a showroom or whatever, a show house, whereas now it's a lot more, you're seeing everything now with virtual views, and everything is a lot more transparent. Yes, you're physically not getting in there, like I said, but you're seeing videos, you're seeing floor plans, you're seeing photographs, you're seeing it, and then you are eventually getting into it once you go say the read in as well, like, you know. So
there's a lot of couples that obviously there's a lot of people frustrated by it. A lot of couples enjoying it, because one couple I was speaking to there during the week, and they viewed 6 houses on a Tuesday evening, and they said, we'd never get from 6 places on Tuesday evening. And obviously they'll whittle it down and they'll do their drive-bys maybe and stuff like that. But there is pluses to that side of it. But again, look, as salespeople, we love getting out and meeting people.
And is it virtual bidding, is it good or bad?
It's good.
Viewing or bidding, whatever you want to call it.
Yeah, it's good. It works. You know, it's all about confidence in the market. You can see at the start, no one thought this was going to work. We were doing videos for a long time, so maybe we're kind of just a step ahead of the game from that. But no one thought it was going to work. But the confidence built when it started to take off. The key thing with it is, I thought we'd have 25 or 30% people pull out.
That's my next question I was going to ask you. How many people are pulling out of the sale?
Very little.
Honestly,
very, very little. Unless we've management company issues or title issues.
Or extension issues.
And I don't know it's whether they're afraid or they've been through such a tough process. But very little.
I know John there in our Mulby Road office there today, he was very firm on the phone with somebody who he knew was bidding on another house, because when we looked up the CRM, their name was an active bidder, and they said they weren't bidding on anything with us. So like I said, and he wouldn't take an offer off them then because he didn't want to be pushing the price up on somebody else. That is obviously happening a lot.
Absolutely, and that's where the agent comes into play to make sure. I say very little because qualifying our buyer is as important as getting the price, because there's no point in a fella bidding up the price, knocking the good people out of the market and then pulling out. And
they're bidding on 4 houses at the same time.
And it's easy to bid on 4 houses now at the same time.
And then your vendor gets that expectation that instead of them getting 350, they've got 370,000, and then it's very hard to go back to them with 350,000.
Especially when it's only worth 350,000.
Yeah.
The first initial time you're on the market, you're always going to generate that little bit more because there's a freshness to it. But no, look, from a bidding point of view, it's working. You know, it is working. People are very, very in tune now. Anytime, even going to a year and a half ago, before pre-COVID, people be rustling around for the mortgage approval, their proof of funds, that different solicitors, whatever it may be. Everyone has that ready immediately. So people know. And I was in a house today, a lovely family, they're upgrading from a bungalow. Really, really nice, only there for 4 years. And I said to them, you have to think about the competition. You have to think about who you're going up against in that home. So the whole key thing with the bidding is, you say you're your own, make sure you have your proof of funds ready if you're a first time buyer, make sure you have your cash ready, documents. So it's a competition. You have to look at, well, are we the best buyer here? Because at the time when you have 5 or 6 different buyers, the agent will report to the owner and they go to the best buyer, even if there's a couple of grand in it.
Especially if the prices are going higher, it's better to go to a guy who's $5 grand or even 10 grand cheaper at that inflated price because he's a better buyer or she's a better buyer and they're going to close out the deal. Would you buy a house in this market yourself?
I would, I would, You buy a house when you're ready to buy it. And it's very, very easy for people to say, don't buy a house and wait for 3 years. Your circumstances could be completely different in 3 years. If you're, say for example, if you're a first time buyer and kids come along, if you're upgrading or downgrading and your circumstances change, if your circumstances are right, and to be honest with the central bank rules, you can afford it, you buy the house.
It's a lifestyle change. Like if your work is after changing or you know your kids are getting too big, you don't have the luxury of sitting there for 3 years or you know, or all of a sudden you have a child going into or if you have a child going to junior cert and they need their own room to be studying or whatever, you need to get a bigger house. You know what I mean? And it's not I just want a bigger house. It's a lifestyle change that you need to get it. Or we have a lot of people that are moving to get into the catchment areas for the schools because their kids are starting school in September now. So this is a prime time for them selling. So they're in time to have their address that they go for get into school. It's all for a year now, aren't they? You know what I mean?
I'm not cancelling the wedding twice myself, so it's or putting back the wedding. I shouldn't say cancelling.
Sorry, Jimmy.
But no, look, definitely. If the time is right for you and you can afford the house, you buy the house.
Okay. Prices, obviously we touched on this, they obviously have gone up.
Yeah, definitely.
Okay.
Definitely.
Like a figure there, what I was looking to see, around 94% of our sales that we've sold since the 1st of January this year have gone in excess of the asking price. Now, they could be 1,000 or they could be 50,000. I don't have that figure.
You can see that, and you can actually see that. I suppose probably coming out of when I first started with you, we were in a recession, and we started coming out of in that sales started pick up again from a base of nothing,
Yeah.
and then bidding more started. So the market is in an upward trajectory. So if you see a home advertised at 350, you generally think you're going to have to pay them 375.
I think you started with me the couple of months after, 2012, was it?
Yeah.
And in 2011 we sold 13 houses.
Yeah.
You know, so I think people have short memories there, like, you know what I mean? So
yeah, so that's what but when we came out of that, the trajectory has always been up. So unless something is completely overpriced, people think, and they ring you up, and it's just the way the market is. In different countries it's different. In London they go the opposite. If it's at 500 it might go for 450 or something.
Yeah.
It's just a different way of doing things.
Okay. Stock levels, like I said.
Look, stock levels, right? 58% up on
Last year.
right? So stock is there.
Yeah.
Good stock is there. The 27% of fair deal pros, and a lot of the fair deals are good family homes, the pros are good family homes. The problem with the stock is it's going so quick.
Yeah.
So it's not the stock isn't there. You can look across Dublin, and there's a couple of agencies who have huge numbers of stock,
Yeah.
and fabulous, absolutely fabulous homes in the market at the minute. So
The older houses are in the better locations, whereas the newer houses are being built further outside of the village or the town or whatever, aren't they, like, you know?
And with restrictions lifting, and hopefully I think there's high numbers today, but with restrictions lifting, that will enable that trade workers to go to the market. So that will release even more stock, and that will level things out, hopefully, in pricing. But definitely, 58% up is I like that figure.
And you presume most agents are kind of like that as well. They seem to be coming on.
Yeah.
Obviously, we got bad news there again during the week. Obviously, this year so far, 2 banks pulling out of the market. Ulster Bank and KBC are trying to sell their loan book, or their good loan book, to Bank of Ireland now as well. So personally, I think this is the bad news because it's less competition.
Yeah.
And like I said, you're going to be going from 7 probably banks, maybe a little bit more lending, down to 5 banks, you know. Just to give you a difference, I know Sean Kavanagh, our financial services manager, put up a video there during the week there when this was announced on the Cooke Mortgages Facebook and Instagram page, and he did a comparison between KBC and Bank of Ireland, the bank rates, okay? So if you're a first time buyer or a trader up or whatever, so it was a very 200,000 mortgage over 35 years, and basically you pay Bank of Ireland an extra 50,000 between KBC's rate.
I couldn't believe that.
It's mad.
It's mental. It's absolutely mental. I've a mortgage with Ulster Bank, so I'm not really too worried about it at the minute. But it's something that we have to look at. There, like,
it's nuts, isn't it?
It's hard to trust the guys in charge to see what we'll do or whether they latch fast.
Yeah. We need more banks, more competition, because, like I said, again, less banks equals less competition equals higher interest rates. So we're all paying more on our mortgages and whatever.
We don't have a good track record of banks in this country.
No.
So it's not as if they're not going to increase.
No, of course they will. Because if there's no one else, if there's less competition out there, we're the highest rates in Europe already. So, like I said, now all of a sudden less competition, it's definitely going to go up. It's not good news anyway.
No.
So, the sales market, like I said, is good at the moment. Like, it's good obviously if you're selling. Buying, obviously it's a little bit crazy out there, but more stock levels are coming on, is what you're saying.
Definitely see more stock levels coming on over the next.
So that's going to calm it down a little bit. In the next couple of months, it's going to calm it down.
And we see that from myself, Ray, and obviously Ross to majority of valuations, and we see that from a valuation point of view. So if we weren't doing valuations on a daily basis, valuations weren't of a high number, you'd be worried about the future level of stock. Valuations numbers are really, really good. So that shows us that going into the summer, that a lot of stuff will come on. And like anything, if you are selling, you talk to your local agent, tell them there is buyers there. There's a lot of off-market stuff being done because people are in their agents here and they know stuff coming on. So just engage and open lines of communication, and you'll definitely see, please God, the restrictions lifting.
And it's the same with the mortgages there as well. Shop around. We're not just saying go to Cooke Mortgages and go to us. Shop around, guys. If you just walk into the one bank, you're going to get the one deal. And you've seen the difference between KBC and Bank of Ireland there. 50,000 over a 35-year mortgage, which is absolutely nuts.
But that's the cost of kids on college.
It's massive. It's massive. So we're going to touch on the rental market now as well. So are rents going up or down?
Rents are going down slightly, and definitely more in the inner city or kind of the Google's neck of the
IFSC, Dublin 1, 2 and 4, we touched on before.
I seen Kennedy Wilson have a building half empty as well. So in parts of town rents are going down, but they certainly haven't stopped. They're still strong. And the rental market is still turning over very, very well. I think anyway. While they have come down a little bit, they haven't come down to where you say rents are cheap.
No.
They're certainly not cheap.
No.
And
I think our average rent is probably around 1,900 a month.
Yeah, which is phenomenal. That's why that even.
We're all over Dublin. We're in every area of Dublin. So,
but that veers back to is it the right time to buy? Like if you're paying €1,900 a month in rent, and of course a lot of people have to. A lot of people have to. There's a number of reasons for that. Obviously, the councils and HAP schemes and stuff like that do drive rents.
I think people, like I said, should bite the bullet, buy a smaller house and move out. And then eventually, hopefully in 5 years' time, be able to move back and buy in that area. But the fact of the matter is, a lot of these first-time buyers now are in their 30s, they have young families, and they want to be beside mommy and daddy. And then what they do is they get into that rental trap, and they're paying rent. Like you said, they're paying £2,000, £2,500 a month, and then they can't afford to buy a house. Whatever. We have a lot of our clients now actually that have sold properties and moved back with their mom and dads, haven't they? Like, and they're saving for 2-3 years with their kids, with everything, to obviously get up on the ladder and everything.
It's making a sacrifice. But in terms of the rental market, obviously, when it comes to huge rental base and huge management base, I don't think we've had a huge number of people vacant properties for long. I don't think we've had huge numbers of issues with non-payments of rent. Again,
the turnover time is around 2 weeks. I think it's around 15 days.
Which is massive.
So as if the tenant moving out.
Because even if you look at even the bad times that we spoke of 2012, like to be some rentals just have for 2 or 3 months. And honestly, you'd be renting 2-bed apartments in great locations for $850.
And we're the politicians now who said knock down all the ghost housing stations. They'll never be lived in again. And I remember back then, like I said, in 09, 10, 11, 12, 13, 14, you probably had 3 or 4 houses for every tenant. You know what I mean?
You'd be going around showing
properties.
You'd be going around and showing the one tenant maybe.
They used to get into the car, they used to drive around with them to show them the properties.
And you'd be sick if they wouldn't take it.
And that was it. But again, I think obviously with Dublin 1, 2 and 4, obviously we've seen an increase, especially in the last 4 to 5 weeks, because Google have rumours to be bringing all their staff back from remote working, as productivity is way down, and this is worldwide they've come back. So you presume all the big employers in town are going to follow suit there as well, because you have to presume on a nice day like today, there is obviously great staff, but if you have 100 staff, the likelihood of them, there's a huge percentage of them spent a good bit of time outside today. You know what I mean? So if they're work, they wouldn't have done that,
No, and how much work have they done?
Exactly.
But you can see we're the third biggest second-hand sales agent in the city. So you can see by our figures of types of sellers, investors at 26%, but types of buyers, investors at 28%. So there's still a good level of confidence in that time for investments.
And they're mostly we don't really deal with big, huge funds that are coming in and buying blocks. We're dealing with individual buyers coming in and buying an investment property, or they're buying through their pension or buying whatever, but they're individuals.
They're not funds buying 300 or 400 properties. So you can see the confidence is still there because the returns are still very, very good.
The thing as well with the city centre, like I said, is it ever going to get back to the way it was?
Absolutely.
Do you think it will?
I do. I think that.
I think people have got used to having a better lifestyle. I think people are going to realise that they don't have to go into town and commute for an hour every day and be stuck in, 2 hours, an hour in and an hour back out, and be stuck in traffic. Yes, you're going to have young people that are going to like the partying and the social life and that aspect of it, but I think young couples that are buying a property or even renting a property have realised over the last year they want to be closer to the parks, they want to be closer to certain schools. Whereas I know you were different, so and maybe that's where the 10-year age gap comes into it now, So
I'm looking forward to going back into town.
I tell you, we all are now as well. So, but look, that's it. Okay, so I think that was a good video. That was our information again, guys. Look, I think that's been a great video this week. We've had Pete the Builder on. We've had Colin O'Coughlin in.
We've had
Walford, Richie Collins in there as well. We've gone through virtual viewings. We've gone through how to increase values. We've had financial services with mortgages. So these are the type of videos, guys, we're trying to put out to you as well. If there's something you want to hear back from us, let us know. So
we'll go down the next couple of weeks in building surveyor. So first or second time home.
Better associates.
Is to get a surveyor in. So a few really good tips in that, because it's before you spend the money on the house, it's the most important thing. You spend that 500 or 600.
We say to everyone, like, again, we're not surveyors, so we can't tell you if the wind is going to knock off the roof. You know what I mean? So go in and get it. Like, sometimes people don't want to spend a 300, 400, 500 euros on it, but it's the most, like, and people spend the 400 euros or 500 euros and nothing's wrong with the house and they're giving out. But if you spend 400 euros and there is something wrong with the house, it's the best 400 euros you've ever spent. You know what I mean? And you've saved money, you know?
I know Roger's flat out, but we are definitely booking for next week.
In fairness, we're going to put it down.
Really good.
I'm looking forward to that one, you know?
But anything at all you want, we don't mind sitting down first evening here and having a chat notion. But that was really good, and it's interesting to see the figures. And there are today's figures, up to date from today. So.
Up to date from lunchtime today, or just after lunchtime today, so you can't get fresher than that as well. So cheers guys, thanks very much for tuning in as usual.